Welcome to our Hong Kong Brief Show. I'm your host, Jenny. Today, we're diving into the fascinating world of Feng Shui with Cliff Tan, a modern architect turned social media sensation. He's changing the game by making Feng Shui practical and approachable, especially on TikTok and Instagram, where he has over 4 million followers. His approach focuses on energy flow and organization, leaving behind superstitions and embracing a more intuitive, emotional intelligence-driven perspective. It's a fresh, modern twist on an ancient practice that's gaining worldwide fans. Next up, big news from Europe. JD.com, the Chinese e-commerce giant, is stepping onto the European stage by acquiring German retailer Ceconomy for about $2.5 billion. This move marks JD's first major step outside China, aiming to build Europe's leading consumer electronics platform. Ceconomy, which owns MediaMarkt and Saturn, will stay independent for now, with no store closures planned for at least 3 years. It's all part of JD's global growth strategy, expanding logistics and retail capabilities across Europe and Southeast Asia. And finally, the Hong Kong stock market is feeling the heat today. The Hang Seng Index dropped 1.3%, heading for its lowest close since July 18, mainly due to concerns over the U.S. Federal Reserve's decision and China's manufacturing data. U.S. markets paused after the Fed signaled no immediate rate cuts, while China's manufacturing PMI dipped below expectations. Across the region, markets showed mixed reactions, with some rising slightly and others falling. It's a reminder of how interconnected our global economy truly is. Please continue to watch for more detailed insights. South China Morning Post highlights Cliff Tan's innovative approach to Feng Shui, transforming a centuries-old practice into a modern, approachable art through social media. Tan, originally an architect, now dedicates himself to making Feng Shui practical and relatable, emphasizing the flow of energy and spatial harmony over superstition. His TikTok and Instagram channels showcase simple yet insightful tips, like avoiding pointing your feet toward the door, which resonate with a global audience. His personal journey from a reserved designer in London, struggling to find his voice, to a vibrant social media influencer underscores how adapting traditional wisdom to contemporary life can foster better understanding and well-being. Tan's background in architecture and his childhood fascination with cosmic myths reveal how he bridges the mystical and the practical, demystifying Feng Shui and emphasizing its relevance as a tool for emotional and spatial harmony in today's world. Nikkei Asia reports JD.com's strategic move to acquire German retailer Ceconomy for $2.5 billion, marking its bold entry into the European market amid fierce domestic competition. The deal involves a cash offer of €4.6 per share, with Ceconomy's operational independence preserved for at least 3 years. JD.com aims to leverage Ceconomy's extensive network of over 1,000 stores across 11 countries, including its flagship brands MediaMarkt and Saturn, to build a next-generation consumer electronics platform in Europe. CEO Sandy Su envisions this partnership as a means to create long-term value for customers, employees, and investors, expanding JD's global footprint. The transaction reflects JD.com's broader ambitions to grow beyond China, with ongoing investments in omni-channel retail and logistics, exemplified by initiatives like Akama in Europe and JD Property in Southeast Asia. The deal signifies a strategic push to integrate Western retail strengths with Chinese e-commerce innovation, positioning JD as a formidable player on the global stage. South China Morning Post also details the recent downturn in Hong Kong stocks, which are heading toward a 2-week low amid cautious sentiment following the U.S. Federal Reserve's decision to hold interest rates steady and China's disappointing manufacturing data. The Hang Seng Index dropped 1.3%, with technology stocks declining further, while mainland indices like the CSI 300 and Shanghai Composite also fell. The U.S. Fed's indication that no rate cuts are imminent, coupled with China's manufacturing PMI slipping below 50, indicating contraction, dampened investor confidence. major companies like Wuxi Abtec and Zijin Mining experienced significant declines, reflecting concerns over economic growth prospects. Meanwhile, other Asia-Pacific markets showed mixed results, with Japan's Nikkei rising slightly and Korea and Australia experiencing minor losses. The global financial landscape remains cautious, as investors digest signals from central banks and economic indicators, underscoring the fragile recovery and the interconnectedness of regional markets. According to South China Morning Post, a viral video claiming to depict Hongkongers battling Typhoon Wifa was proven to be misleading. The footage, which showed people struggling against fierce winds, was actually taken in Zhuhai, mainland China, during a storm on July 19. The investigation revealed that the video originated from Newsflare, a UK-based platform, and was posted on weather-related social media accounts. Satellite imagery and location clues, such as the Melland Club sign and the Zhuhai Opera House, confirmed the scene was not in Hong Kong. This incident underscores the importance of verifying online content before accepting it as fact, especially during natural disasters when misinformation can spread rapidly and cause unnecessary panic. Nikkei Asia reports that Sri Lanka is making a bold move to boost its tourism and entertainment sectors by opening the City of Dreams Sri Lanka, a $125 million integrated casino resort in Colombo. Backed by Hong Kong's Melco Resorts and John Keel's Holdings, this venture aims to emulate the glitz of Las Vegas and attract Indian middle-class travelers, who are already the largest group of overseas visitors to the island. The casino, situated within a luxurious waterfront complex with 2 hotels, is seen as a symbol of Sri Lanka's economic recovery and a strategic effort to diversify its tourism offerings. However, concerns about regulatory oversight and potential money laundering risks remain, as critics worry about the adequacy of existing laws to ensure transparency and integrity in the gambling industry. Nonetheless, the project reflects Sri Lanka's ambitions to position itself as a regional entertainment hub and capitalize on its proximity to India and China. South China Morning Post also highlights Hong Kong's evolving approach to cryptocurrencies amid recent legislative developments. The city's Securities and Futures Commission, SFC, has established a comprehensive regulatory framework to oversee virtual assets, emphasizing investor protection and market stability. Landmark court rulings, such as the 2023 decision recognizing cryptocurrencies as property, have clarified their legal status, enabling the application of traditional remedies like injunctions and insolvency procedures. Additionally, the upcoming stablecoins bill will require issuers to obtain licenses from the Hong Kong Monetary Authority, differentiating between retail and professional investors to mitigate risks. These measures aim to balance fostering innovation with safeguarding financial stability, reinforcing Hong Kong's position as a leading global hub for digital assets and blockchain disputes. CNN reports on the historic North London Derby, a fierce rivalry between Arsenal and Tottenham, taking an unprecedented step by moving the match overseas for the first time in 116 years. This friendly match will be held at Hong Kong's Kai Tak Stadium, drawing record-breaking attendance and igniting mixed feelings among fans. Some supporters, like Arsenal's Miles Pine, feel the move threatens the Derby's sacred tradition, fearing the electrifying atmosphere and rivalry spirit might be diluted outside London. Conversely, supporters like Billy IP see it as a golden opportunity for fans who cannot travel to London to experience the high-level excitement firsthand. The event symbolizes the broader trend of global commercialization in sports, with organizers optimistic about future international fixtures, especially if this one proves successful, as evidenced by previous record-breaking matches. South China Morning Post delves into Hong Kong's recent efforts to bolster its international image through a comprehensive business report, which aims to dispel misconceptions amid ongoing geopolitical tensions. Industry leaders acknowledge that while the report offers valuable data and highlights Hong Kong's resilience and advantages, many investors will rely on their own research and independent sources before making decisions. Experts like Terence Chung and Billy Mack emphasize that the report's true value lies in providing a positive narrative, but it may not significantly sway investors who seek politically neutral, stable markets. The report underscores Hong Kong's strengths, its robust financial markets, talent influx, and stable institutions, yet critics warn that geopolitical uncertainties and negative perceptions persist, potentially limiting the report's influence on global investment flows. The South China Morning Post features the story of Montana, a new cocktail bar on Hong Kong's Hollywood Road, founded by two renowned mixologists inspired by Cuban heritage. Simone Caporali and Lorenzo Antinori, celebrated for their mastery of classic cocktails and innovative techniques, created Montana as a homage to Cuba's vibrant cocktail history and its influence on American bartending. The bar's design transports patrons to a nostalgic era with a blend of music, history, and expertly crafted drinks, including signature daiquiris and mojitos. Their focus on timeless classics and Latino-inspired cuisine aims to captivate Hong Kong's curious and sophisticated audience, offering a lively, convivial atmosphere with surprises like daiquiri hours and live band nights. Facing challenges like the widening gap between budget and luxury venues, the founders believe that authenticity, creativity, and engaging entertainment will help Montana stand out in a competitive market. According to South China Morning Post, the Hong Kong Monetary Authority, HKMA, has decided to keep its base rate steady at 4.75%, aligning with the U.S. Federal Reserve's cautious stance amid ongoing inflation concerns. The Fed, after 5 consecutive meetings without rate hikes, emphasized the need for more data before making any adjustments, citing uncertainties around inflation and tariffs. This cautious approach has led to a significant market reaction, with U.S. stocks plunging and Treasury yields rising, reflecting investor anxiety over the prospects of future rate cuts. Meanwhile, Hong Kong's monetary policy remains tightly linked to the Fed's, with the HKMA intervening multiple times in the foreign exchange market to defend the currency peg, selling U.S. dollars and buying Hong Kong dollars to stabilize the exchange rate amid global economic uncertainties. BBC reports that President Donald Trump has signed an executive order terminating the global tariff exemption for low-value goods, a move set to take effect on August 29. This policy change ends the de minimis exemption, which previously allowed goods valued at up to $800 to enter the U.S. duty-free, a loophole heavily exploited by online retailers like Shui and Temu. The White House asserts that this exemption was being used to evade tariffs and smuggle synthetic opioids into the country, posing a national security threat. By removing this exemption, all packages, regardless of origin, will now face applicable tariffs, with the aim of curbing illegal drug trafficking and ensuring fair trade practices. The move marks a significant escalation in the U.S. government's efforts to tighten customs enforcement, affecting millions of small parcels entering the country and challenging the operations of major Chinese e-commerce platforms. Nikkei Asia highlights that from August 29, the U.S. will suspend duty-free shipping for all foreign packages under the de minimis threshold, intensifying efforts to combat duty evasion and drug smuggling. This policy, announced by the White House, extends the previous restrictions that targeted shipments from China and Hong Kong, which accounted for the majority of low-cost parcels entering the U.S. Under the new rules, packages sent via international postal services will be subject to tariffs based on their country of origin, with potential duties ranging from $80 to $200 per item during an initial 6-month period. This crackdown aims to curb the surge in low-value shipments, over 1 billion in recent years, used by Chinese e-commerce giants like Temu and Shein to bypass tariffs, while also addressing concerns about the illicit flow of synthetic opioids. Critics argue that this policy will bolster American manufacturing and protect public safety, though it may also disrupt global e-commerce operations and supply chains. The CBC reports a significant shift in U.S. trade policy, as the White House announced the suspension of the de minimis exemption, which previously allowed low-value packages to enter the country duty-free. Starting August 29, packages valued at or under $800 sent outside the postal system will face tariffs based on their origin, either an ad valorem duty or a fixed tariff ranging from $80 to $200, depending on the country. This move, signed into effect by President Donald Trump through an executive order, aims to address national emergencies and protect American businesses, especially as the recent tax and spending bill explicitly repeals the exemption's legal basis by 2027, signaling a tightening of import regulations and a potential increase in costs for consumers and shippers alike. The Sydney Morning Herald describes how Wall Street and global markets reacted to the Federal Reserve's decision to hold interest rates steady, despite signs of a resilient U.S. economy. After a surprisingly strong spring growth of 3%, stock indexes like the S&P 500, Dow Jones, and Nasdaq experienced slight declines, reflecting investor caution amid ongoing trade tensions and inflation concerns fueled by tariffs. Meanwhile, the Australian dollar plummeted, and bond yields fluctuated, indicating mixed signals about economic momentum. Notably, the Fed's chair Jerome Powell emphasized the need for more data on tariffs' inflationary impact before considering rate cuts, even as some officials hinted at possible easing. Corporate earnings, such as Humana and Electronic Arts surpassing expectations, contrasted with setbacks like Trane Technologies and Starbucks, highlighting a market grappling with uncertainty and the pressure for companies to sustain profit growth in a complex economic landscape. The Sydney Morning Herald also vividly captures Shanghai's enduring Art Deco charm through a detailed exploration of the historic Peace Hotel, an architectural jewel from the 1920s and 30s. Once a symbol of luxury and modernity, it hosted luminaries like Charlie Chaplin and Richard Nixon, boasting innovations such as indoor plumbing and air conditioning. Today, after extensive restoration, the hotel retains its glamorous Art Deco interiors, with original stained glass windows, intricate ironwork, and a jazz club that echoes its storied past. Visitors can indulge in afternoon tea or cocktails while enjoying panoramic views of the Bund and Pudong, witnessing the city's evolution from a jazz-age metropolis to a futuristic skyline. The hotel's history, from Japanese occupation to a modern luxury icon, exemplifies Shanghai's seamless blend of history and modernity, making it a living testament to the city's architectural and cultural resilience. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.